It's a beautiful Friday from this part of the world. Good morning to every single one of you. And I hope you're doing very well this morning. And how are we prepared for the New York session today? So let's quickly do this. If you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this session started. I want to see some response, please. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so we can get this started. Okay, thank you very much. Good morning, 518. Good morning to you. 617, good morning. 222, good morning to you. I can see 573 as well. Good morning. Okay, thank you, 222. Good morning to you. And how are you doing today? So I want to take this as a confirmation that we are all good to go here. So I'm excited to welcome you to yet another promising session on the Extreme Speed Life Hub. My name is Sheriff Daramola, and in the next 1 hour, I shall be taking you on a trading journey where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. So with that being said, it's our culture. This is the last trading day of the week. It's a Friday and we want to be rounding off on all the pairs we have been monitoring since Monday. And if there is a little chance that we could take advantage of another trading opportunity today, I will be sharing that with you during the course of the live session. So I will be advising you to stay tuned in so that you don't miss out on any of this very important information that I will be dishing out during the course of the session. So with that being said, I hope we are prepared and ready for the live session. So put aside whatever you're doing and let's dive straight into the chat and let's see what is going on in the market right now. So the first pair we are going to be looking at today, as usual, is going to be the US oil. And what do we have here on the US oil? We have a situation where price is actually moving in the expectation that we projected as at yesterday. So what do we have here during the live session yesterday on the US oil? So during the live session yesterday, we were around this area. We were within a consolidation phase right around the $78 level and the $77 area. As we can see, price was caught within a consolidation phase for over 24 hours. And this consolidation phase actually extended into the later part of the New York session yesterday. And what I made emphasis on here on this channel, thus on during the live session yesterday, was that we want to be very patient to look out for a breakout retest of structure to give us that leverage to either buy or sell the US oil at this point. So what are we looking forward to yesterday? We were looking for either a breakdown retest of the structure to send price crashing to the downside. Though we had a breakdown here during the first 2 hours of the New York session, we saw a breakdown of that structure, but price did not go back to do a retest, followed by selling pressure on our lower time frame. So that structure there was negated at that particular point in time. However, during the early hours, later part of yesterday's trading session, we saw a breakout of the $78 level, the resistance point of the channel. You can see how this level has been holding selling pressure since Wednesday. So we had the breakout of that structure. Price came back to do a retest of that structure, and we saw price continue to climb to the upside from that area, which was quite a very beautiful scenario that lined up exactly with our technical expectation on the US oil. So for those who are taking advantage of this opportunity, I would like to congratulate you guys for being on standby. Remain patient to be able to enjoy this move. So currently, for those who are taking advantage of this move, you will currently be running with over 160 pips in profit, which is not bad to close the week with on the US oil. So the next thing we want to be doing, remember what I told you yesterday, that as soon as price breaks out of the $79 level, we want to be moving our stop loss accordingly and to protect our position against any sudden pullback. Remember, we are on a long-term bearish momentum here. As you can see, what we have on the 1 hour time frame, we have a trend line which has been holding selling pressure for the past 2 weeks now. So we are this opportunity we are taking above the $78 level is more or less considered to be a counter trend opportunity. So we want to make sure that we lock in our profit. We want to move our stop loss accordingly so that we can protect ourselves against any sudden pullback that is very likely to happen here, considering the long-term bearish momentum. So like I said yesterday, we want to be moving our stop loss to somewhere right below the $79 area here. Let's protect our position around that area, which will be giving us about let's see how many pips that is. That's over 100 pips thereabouts. That is if price pulls back to the downside from this area. So with this being said, we have locked our position and we are safe on the US oil right now. So what is going to be our plans as we head into the New York session today? And also for those who missed out on this opportunity, let's see if the market is going to present us with another chance to either join the potential bullish momentum or add more position to our existing trade. So let's quickly run through the daily time frame. Let's have an holistic perspective of what is really going on in this market, if the structure, if the position we have taken this morning is lining up with what our expectation is on the daily time frame. So as we scale up to the daily time frame, let's quickly run through what our expectation is like on this higher time frame. So right here we are on the daily time frame. So for the sake of this session, I will just zoom in to the current structure that has been existing since the month of September here. And like I told you, we have two major structures here that we shall be using as our guide as we move on to the New York session today. Well, the first one is the $78 area, and if you look at how this level has been since the month of September, we can see that despite that fact that we have been on a long-term bearish momentum, at least in the last 4 to 5 months now on the US oil, we can see how the $78 $80 area has been holding buying pressure, hereby negating all sellers attempt to push price further to the downside. We saw an attempt here by the buyers. We saw the same thing happen here in September. Another one happened here during the first week of the month of October, and then in the last during the course of last two trading sessions stroke this week, we have been witnessing buying pressure again from that same area to emphasize the strength of the buyers at this point. The other very important key level that we want to be using here is the $85 level, which is a major determinant of price action in the last 3 to 4 months. Now, look at how that level was holding buying pressure here in the month of October before all buy pressure was negated by the sellers, hereby pushing price right to the downside of the $85 level. And throughout the month of September, price continued to trade right below that level to emphasize the strength of the sellers at that point. However, during the first week of the month of October, we witnessed the breakout of the structure, which is as a reflection of the OPEC Plus decision to cut oil production, and we saw a retest of that structure with the hopes that price might likely incite another wave of a bullish momentum, but this was negated by selling pressure right around the $93.50 level, which finally led to the breakdown of that very important key level we identified earlier to emphasize the strength of the sellers. So right now, in the last couple of weeks now, we have seen a situation where price has come back into that demand zone, which has a memory for buying power, as you can see here, and we have been witnessing a consolidation phase around this area since the beginning of the week. Though we took quite some opportunities here, I think we took advantage of the sell momentum at the beginning of the week, and right now we are enjoying that bullish momentum that we took advantage of yesterday. So now the scenario that we are looking forward to at this point is still remains what our expectations is like on Monday, as we were expecting two possible scenarios to happen here. A situation where this demand zone here will be respected one more time by the buyers to push price further to the upside in such a way that price might likely come back into the $85 area, or probably the bullish trend line here. And what is um, the rationale behind this expectation? Well, if we look at the structure here, we saw how the $85 level was broken to the downside, an area which also shares a very important confluence with the bullish trend line that has been holding price action bullish since in the last 2 years. So whenever we have a breakdown of a structure like this, what do we expect? Of course, we expect that price is likely going to come back and do a retest of that structure, which has a tendency of insinuating another wave of that bearish momentum that started 3 weeks ago. So this is the first scenario we were looking forward to. So we are hoping that price is likely going to come back into the $85 level. So we have placed our take profit target for this buy opportunity somewhere right around the 88 and the $85 area, so that we can see how price action will relate to that structure if it happens that the bullish momentum extends to that level. So that is the first scenario we were actually looking forward to at the beginning of this week. Now, the second scenario we were looking forward to is a situation where we could have a consolidation phase around here, emphasizing a further indecision here, which has been what we have been witnessing in the last 2 weeks now, which might likely lead into a bearish trend continuation pattern where we look out for breakdown, retest of structure on our lower time frame to send price crashing to the downside. So we are at a very critical area in the market right now, right around the demand zone area, which is located right between the $80 level and the $78 area. So like I said on my 1 hour time frame, we want to ensure that the buy position we took advantage of yesterday, we want to ensure that we have moved our stop loss accordingly, lock in our profit at a desired target area, and let's see how price action will play out. So if we are going to be having a trend continuation to the downside in such a way that price might likely break down that structure, retest of that structure, takes us out of our buy position, which we have already locked with about 100 pips thereabout, then we might be getting ready to join that decline to the downside. So for those who had missed out on this opportunity that we took advantage of yesterday, let's see if the market is going to be presenting us with another chance to add more position or join that rally to the upside. So in this regard, we want to understand what is really going on here. So let's scale back down to our 1 hour time frame, where we are going to be looking at what is happening there and use the structure that we are able to identify around there to determine what our next line of action will be. So scaling back down to the 1 hour time frame here, excuse me. So scaling back down to the 1 hour time frame here, this is what we have here. So since the beginning of the week, this how the week started here on the USOil. We had a situation where price was caught with the, excuse me, I'm having a little bit cold, so I've been sneezing lately. So don't mind my intermittent interruption in the broadcast. All right, so we have been in a situation where price has been caught within a consolidation phase right around the $80 level and the $79 area since the beginning of the week. And I told you that we are going to be looking out for breakout of the structure to take advantage of any momentum that the market is going to be presenting to us. And luckily for us, we were able to take advantage of this bearish move as price broke down that channel on Monday to give us over 360 pips in profits as price went exactly into our TP target area. That was on Monday, and then we saw another reversal move. We took price right back to the upside from here, which I actually missed, though some people took advantage of that move. I missed that move to the upside there, and we had a situation where price broke out of the $80 level. That is the resistant level of the channel that we identified on Monday. We saw the breakout, we saw the retest of that structure, we joined the buy momentum, and price took us to somewhere around the $82.40 level, which gave us about 200 pips thereabout before we started seeing that bearish momentum, which was close to the resistance of that bearish trend line that has been holding selling pressure in the last 2 weeks here. So we saw a situation where we had the reversal structure, something like a double top structure here, and we also took advantage of that bearish momentum on Wednesday, and it took us right back into the $77 level, with about how many pips that was? Over 300 pips at this point. So as you can see here, we are very profitable on the US oil so far for this week. And now in between Wednesday and Thursday, we were caught within a very strong consolidation phase here as price action continued to oscillate right within the $78 level and the $77 area, giving us a clue that there is an indecision at this point. And like I told you yesterday, I said we were going to be patient enough to wait out for a breakout retest of the structure before we want to be joining any potential move at that point. And because of this multiple rejection of the $77 level, I was of the opinion that we might be having a bullish momentum. And secondly, remember we had the previous low here. There was the lowest point price got to this week. That's around the $75 level. That was the lowest point. And when price got into the 77 area, we can see that every attempt by the sellers to push price further to the downside was met with strong resistance from the sellers, hereby having a higher low at this point, giving us a little clue that there is the tendency of a breakout of the channel to the upside. So we had the breakout of that structure, and at this point in time we have moved our stop loss accordingly somewhere right below the $79 area, and let's see how the market is going to play out today. So for those who had missed out on this opportunity here, what I have said here is that what we're going to be expecting to join or add more position to this trade is a situation where we want to be looking at a retest of structure. So we had a breakout of the $79 level here, and how I go. So we're expecting that we might be seeing price come back to do a retest of that structure, followed by buying pressure on our lower time frame. Then we could actually add more position to our existing trade here, or probably join outrightly from that area. But one thing I would like to state here is this: price might not come back to do a retest of the $79 level, but instead come back into a golden zone area, which might likely be somewhere around here before that bullish momentum will happen. So I want us to take all these possible scenarios into consideration. So now at this point in time, we don't know when the retracement phase is going to start here. The only time we are going to know a retracement phase is going to start is when we start seeing reversal patterns on our lower time frame. It could evolve into a double top structure, or probably a head and shoulder pattern, falling wedge, or a flag pattern. Whatever it is, if we start seeing that and we catch probably a breakout retest of structure, there is a tendency that price might likely come back into our golden zone area. So if we identify a reversal pattern there, what I'll be advising us to do is to run our Fibonacci retracement tool through the impulse leg here. Remember, I can't say this is where the impulse leg is ending here. The only way we can know is when we start seeing reversal pattern around that area. So we move our retracement tool, cover the whole length of that area, and we should be looking at an area between the 50 and the 78.6% as a possible area to buy the US oil. So this is one scenario I want to be looking at. So at this point in time, this is just a speculation because we don't know. This impulse leg has not yet ended at this point. So that is one scenario we are looking forward to. And the other scenario is a situation where price comes back to do a retest of the structure followed by buying pressure, then we could join the rally to the upside. So our take profit target still remains at around the $85 level. Remember the very important structure we identified on the daily time frame around the $85 level, hoping that we could get over 700 pips here if price action moves in our favor. Now there is a catch here on the US oil, and that is the $80 area. And why is that so? Now look at how the $80 level shares a confluence with the bearish trend line that has been holding selling pressure in the last 2 weeks here. Remember, we had this bearish trend line which was guiding our trading activity since last week as we took this bearish momentum to the downside. And right now, if price comes into the $80 area here, which lines exactly with the bearish trend line, what we want to be doing here is to move our stop loss accordingly. And the reason why I'm saying this is simply because we want to see how price action will relate to that structure. So if price action comes into that bearish trend line, which I said lines up with the $80 level, and we start seeing selling pressure around that area where price action evolves into a reversal pattern on our lower time frame, definitely we want to be seeing this as a sign that we might be heading for another wave of a bearish momentum in such a way that price might continue to the downside, hereby respecting that bearish trend line one more time. So that is one scenario that might likely happen around the $80 area if price action finds itself within that zone. Then the other possible scenario is if a breakout of the $80 level happens, which also lines up with the bearish trend line, then that we want to be seeing that has a bullish signal. And when that happens, a retest of structure lining up with that bullish trend line followed by buying pressure right above the $80 level on our lower time frame will be giving us another opportunity to add more position to our existing trade. So this is what we are looking at as we head into the New York session today. And I think I'll pause the video at this point and let's see if there are any questions regarding what I've just explained so far before we move on to the next pair. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before I move on to the next pair. So let's see what's going on in the comment section. All right. Okay. Hey, hi, Max. Good morning to you. How are you doing today? 5511 245 194. Good morning to you all. 698 Isaac Dumisa. Good morning. 452. Good morning to you. All right. Susie MB. How are you doing today? Glad to have you around. I want to assume that this is well understood. So in the absence of no questions, let's move on to the next option. So the next option we are going to be looking at today is the US tech. Now on the US tech, we have been enjoying a bullish momentum since Tuesday on this one, as you can see here. So how did the week started here? So we were initially we witnessed the breakdown of that very important key level at the 11,700. So we saw the retest of that structure, which we took advantage of earlier on in the week as price action moved back into the 11,500 area. And one thing we noticed around the 11,500 during the live session on Tuesday was that we were seeing buying momentum around that area, which was peculiar with what happened during the later part of last week. We saw the buying pressure started last week around that area, negating all selling pressure. Then we saw the same thing happen here on Monday, where buyers push price to the upside again. And then later on Tuesday morning, we saw this structure again. Then I told you to move your stop loss for the sell position, lock in some profit around the 11,600 as we anticipated that possible buy momentum here. And fortunately for us, we saw the breakout of that structure. Price came back to do a retest, and since then we joined the rally to the upside. And for those who are in this trade since where was that since Tuesday, we were able to catch over how many pips in profit? Over 320 pips in profit on our first position, and then we saw another breakout of the $11,700 level on Wednesday. We took advantage of this. Price moved over 180 pips again, and yesterday we took advantage of this opportunity. I think that closed at break even, as we neither made any money nor loss on this trade. So we are very profitable on the US tech here, and I told you something yesterday that we are going to be having a yardstick for trading activities for the week. And what was that? It was this bullish trend line here, and we got that trend line after connecting the series of higher lows here since the beginning of the week. We saw how price uniformly continue to find higher highs and higher lows. And the one thing I stated here yesterday was that if price breaks down that bullish trend line, we want to be seeing that as a bearish signal. And lo and behold, that happened during the early hours of today, taking us out of our positions here as price action broke down the bullish trend line here. And then we have been seeing selling pressure right below the $11,900 level since the early hours of today. So with the selling pressure identified are below the $11,900 level, we are thinking, okay, fine, which led to a final breakdown of that structure. This is more or less going to be a bearish signal at this point. So what I identified yesterday was that if price breaks down the bearish trend line, which will also share a confluence with the $11,850 area, then we want to be seeing that move has a bearish signal. Then a retest of structure followed by selling pressure in our lower time frame will be another opportunity to sell the US tech at this point. And if price continue to move to the downside, comes into the $11,700 level, somewhere around here, we want to move our stop loss accordingly to lock in some profit, as we want to see how price action will relate to the $11,700 level, because there's the possibility that we could be having buying pressure right above this area to incite another wave of bullish momentum. It's a very good possibility here. And if price breaks down the $11,700 mark, a retest of structure will definitely incite another possible bearish momentum. So we're having our take profit target around the $11,500 area. And the reason why we are having our take profit target within that area is simply because of how that level has been holding buying pressure since the later part of last week. So we want to see how price action will relate to that structure. So this is my view here on the US tech, and let's see how price action plays out during the New York session. Well, another thing I was able to catch here is this. If you notice the structure we have here since the early hours of today, we can see that price was caught within a consolidation phase right within the 11,900 and the $11,850 area, which appears to have been broken to the downside this morning, I think a couple of hours ago. So what I'm saying here is that though this is looking more bearish to us right now, a breakdown of the bullish trend line, breakdown of the support level of that channel, this is a sign that we should be selling outrightly. But sometimes the market does otherwise, and if it does, we also want to get ourselves prepared to take advantage of that move if it happens. So what I'm saying here is that if at any point in time buyers at any point in time try to take over this market, what I'll be saying here is I want to see price break out of the $11,900 mark. Remember that area has been a strong selling niche in the last 18 hours or so. So we want to see price take out all the sell position here to give us a signal that the buyers have come to stay at this point. So if a breakout of that structure happens, a retest should be giving us a leverage to join the rally to the upside. And like I told you in the previous session, is that we want to be having our take profit target around the bearish trend line. Let me show you why that is on a higher time frame. So when we scale back up to the daily time frame here, we can see we have this bearish trend line figured out after connecting the series of lower highs. And you can see since the beginning of the year, it has been a sell for the US tech. So we are saying, okay, fine, if price continue to the upside here, the TP target will remain around the bearish trend line here, as we want to see how price action will relate to that structure, if it's going to break out that structure, or we're going to be seeing sudden pressure that might likely send price crashing further to the downside. So these are the likely scenarios we are going to be looking forward to on the US tech. So if you have any questions, feel free to drop in your inquiries in the comment section, or you need any further clarifications, feel free to drop in your inquiries in the comment section. So with that being said, let's move on to the next pair. So the next pair we are going to be looking at is the EURUSD. Well, the EURUSD has been very indecisive in the last 24 hours here. Remember, we took advantage of this bearish momentum during the live session, before the live session yesterday. As soon as price got into the 1.04500 level, we started seeing selling pressure. And if you look at how that structure has been in the last 1 week here, I think in the last 6 to 7 days, 7-8 days now, we can see that that level has been holding selling pressure at one point in time, especially during the course of last week trading session. And as soon as price got into that level and we started seeing selling pressure on our lower time frame, it's incited the possibility of selling from that area. So we took advantage of that move at that point. So well, for those who missed out on the opportunity we took advantage of here yesterday, well, I told you guys to hold on and remain patient to see a breakdown of the structure to join or add more position to this trade. So remember this 1.03750 level. You remember how important that level is on the daily time frame. Don't worry, I will be showing you that in a moment. So for those who are still in this trade, I hope you moved your stop loss accordingly. For me personally, I placed my stop loss at break even somewhere around my entry zone here, so that if price comes back to my entry point and takes me out of my position in such a way that price climbs up, then I will be taken out at break even, not in a loss. So this is the scenario I'm looking at on the 1 hour time frame. But for the sake of clarity, and for us to understand how important the 1.03750 is, and also for those who missed out on our earlier session this week on the EURUSD, let's quickly go through what is happening on the daily time frame. Now, going up a little further to the daily time frame, what do we have here? So on the daily time frame, the first thing we observe here on the daily time frame is that price action has been on a long-term bearish momentum. In fact, in the last 2 years now, we had this lower highs connected and we had that resultant bearish trend line you can see on your screen with the dark line. And in addition to that structure is the 1.03750 level, which has been a major determinant of price action since the month of May of this year. As you can see on the chart right now, we can see how that level at one point in time was holding buying pressure in the month of May. And the same thing happened here in the month of June. And then if we fast forward into the month of July, we saw how that level was significantly broken to the downside to emphasize the strength of the sellers at this point. And to further give us a clue of how strong the sellers are in this market, you can see that from the month of July, price has continued to trade right below the 1.03750 level, and you can see how important that structure is. Right now, look at what has happened here in the last 2 to 3 weeks on this chart. You see, as soon as price got into that bearish trend line one more time, remember the trend line that I was holding certain pressure for the last 2 years now on this chart, and we can see that how that level also shares a confluence with the 1.03750 area. So price has been oscillating right around that area since in the last 2 weeks now. Though this week we saw this bullish momentum, despite the fact we saw this bearish momentum bringing price to the downside, we saw engulfing candle during the early days of this week, which brought price again right above the 1.03750 level. So for me at this point, it's still looking a little bit dicey here, as price is still within that very important structure that we identified here. So we're at a very critical point in the market right now. So we continue to remain patient and look out for significant signal that will be guiding our action for today. Now, one thing I also want to say here is that for us to understand what is really going on here, we would likely need to scale down to a much lower time frame. And one thing I also want to share again here is that following this impulsive move to the upside, where price has come back into the bearish trend line, where we saw a sharp rejection of that level here on Tuesday last week, and I'm of the opinion that we might be having a reversal pattern in the form of a double top structure, which might likely lead price right back into the key level at the $1 mark area, an area which also shares a confluence with this bullish trend line that you can see here. So if that happens, we want to see how price relate to that level, which also has a tendency of inciting another wave of bullish momentum here. So at this point in time, we need to scale down to lower time frame and let's see what is happening there. But one thing I would like to state here is that below the 1.03750 level is a very good area to be looking for selling opportunities. So let's look at what is happening on the lower time frame. If the possibility of a breakdown of the 1.03750 level is very likely today. So scaling back down to the 1 hour time frame, what do we have here? So we are back on the 1 hour time frame right now, and if you look at what has been happening here in the last 24 hours, you can see this is the 1.03750 level, which we identified on the daily time frame. You can see that we have been witnessing some rejection of that structure. So we saw one happen here just after the live session yesterday. We saw the sharp rejection of this level, and during the early hours of today we saw another sharp rejection of this area. So that is why I have said that for those who had missed out on this opportunity, let's remain patient and wait for price action to break down that 1.03750 level to give us that opportunity to either join or add more position to our existing trade. So that is what I'll be looking forward to on the EURUSD to sell this pair for today. Now, the other possible scenario here is considering the fact that we have been witnessing buying pressure right above the 1.03750 level, and the fact that price has been on a bullish momentum since the beginning of this week. Well, the buy pressure here could break out of this resistant level. So what I want to be saying is to buy the EURUSD is to see price break out of the 1.04500 level, taking out all the sell position that you can see here since last week. So if that takes out all the sell position, then I want to be comfortable of thinking of buying the EURUSD. If price comes back, do a retest of structure on my lower time frame, or probably buy pressure, then I want to be joining the rally to the upside. So but if this does not happen, well, I want to be on hold waiting for a signal to give me the confirmation to join any trade here. So remember, we are within a channel, a very strong channel, and the channel is right within the 1.04500 level and the 1.03150 level. So if we are selling, we want to be looking at somewhere around here as our take profit target, where I think we might be having another wave of bullish momentum coming in from that level. So let's see what happens during the New York session today. I hope you will get prepared to take advantage of that move when it finally happened. So that is that on the EURUSD. If you have questions, feel free to drop your inquiries in the comment section. All right, so let's move on to the next pair, and the next pair is the XAGUSD, which is the silver, and the silver has moved as expected since the live session yesterday. So what happened on the silver since the beginning of the week? We are also profitable on the silver since the beginning of the week. So let me quickly run through how the week went by on the XAGUSD. So the week started with a situation where price was caught within the consolidation phase of the $20 mark and the $20.70 area. So remember, we took advantage of the selling opportunity here, thinking that we might be having a bearish momentum at the beginning of the week. So we were taking out of that position at break even around this area. But something interesting happened on Tuesday here when we noticed the breakout of that very important key level at the $21 mark. So let me quickly scale up to the daily time frame and show you how important the $21 level was, and that was the basis of our trading activities for this week. So scaling back up to the daily time frame here, so we had a $21 level here. The first thing we observed on the daily time frame was that price action was on a bearish momentum since the beginning of the year, and as a result of this, we had a couple of parameters identified here. One was the bearish trend line, and the other one was the descending channel that you can see here. Now, the most important thing is the $21 level. Now, look at how important that structure has been since the month of May. See what happened here. This is a $21 level. It was a buying niche for participants in this market. Then if we fast forward to the month of June, we saw that area also holding buying pressure, though the pressure there wasn't strong enough, as it finally led to the breakdown of that structure during the later part of the month of June. And since price broke down that structure, we can see how price has continued to trade right below that level to emphasize the strength of the sellers at that point. So you can see how important that $21 level is. Then on the first week of this month, we witnessed the final breakout of that structure. You can see how that level is very important. So we saw the breakout of that structure. Price came back to do a retest of that level again during the early days of this month, of this week rather, and we started seeing buying pressure around this area. And because of the breakout of the $21 level on Tuesday, we've sensed that there might be tendencies that buyers might come in at this point. So we were able to position ourselves very well to be able to take advantage of that move. So let's scale back down to the 1 hour time frame. So we saw the breakout of the $21 level here on Monday. That was a signal for the week. Then we saw price come back to do a retest of structure. Remember, we had multiple retests of that level throughout the course of the week, giving us plenty of opportunity, plenty of time to join that rally. So we had another one here on Tuesday. Then we had another one here on Wednesday as well to give us that leverage to join that rally. So we took advantage of this move. We took here. Price stopped us out at a small profit. We took here again, stopped us out at break even. Then we took another one here, stopped us out at break even, and then we had another one here. So we had a situation where price moved significantly well in our favor, as it moved to as far as the $21.70 level with over 600 pips there to catch there, and that was a very good trade for us at the beginning of the week. Now we identified a sell window right around the $21.65 level, which was as a result of this impulsive move that started last week. So we had this impulse leg here, and then we saw this bullish momentum as a retracement of that impulse leg. So we identified the sell window around our golden zone area, which is around the 68.7% of our previous impulse leg. And one interesting thing happened here, which I showed you yesterday during our live session, was that we started noticing selling pressure around that sell window here, which lasted over, I think, around 18 to 20 hours thereabout. So we saw selling pressure here, and to make our job easier during the New York session yesterday, I was able to identify the neckline of that structure here, we shall be using as our yardstick. So we identified an area around the $21.50 level, where I said a breakdown retest of that structure should be giving us an opportunity to join that decline to the downside. And this is exactly what has happened here. Price broke down that structure. In fact, it gave us multiple options to join that decline. So we saw the breakdown followed by sudden pressure right below the $21.50 level to inside the bearish momentum that we can see here. Now, what makes this more interesting is the breakdown of this bullish trend line. So remember, we had this bullish trend line figured out. We had this bullish trend line which price has been holding since the beginning of the week, has been holding price action since the beginning of the week. So we were able to connect the higher lows here, and as you can see right now, during the early hours of today, we finally witnessed the breakdown of that structure, which also lines up with that key level at the $21.40 area to give us another signal that there is a tendency that sellers might continue to push price to the downside. So for those who are taking advantage of that move right below the $21.50 level, what I will be advising us to do here, move your stop loss to break even at this point around the $21.50 level area. Our entry zone area is most appropriate to put our stop loss at this point in time, because there is still a tendency that buyers might actually take advantage of this $21.40 level to push price further to the upside. So now that we have a breakdown of the structure, which also lines up with the $21.40 level, so what I will be expecting us to do right now, for those who had missed out on this opportunity, where I think the market might give us another chance, so we are going to be looking forward to a retest, either a retest of this bullish trend line, or probably price retest of any area here. Then we look out for selling pressure under the $21.40 level. Then we could actually join that decline to the downside. So I'm looking for selling pressure below the $21.40 area to join that bearish momentum to the downside. So where is going to be our take profit target? Well, I have identified the support level that was holding buying pressure since the beginning of the week, which is around the $20.70 area, has my take profit target for the sell position that we are taking advantage of right now. So let's see how price action plays out. Then one thing I would like to say here is that as soon as price comes back into the $20 mark area, remember the very important structure we identified on the daily time frame, as soon as price comes within that level, we also want to move our stop loss accordingly to protect our position, as we want to see how price action will relate to that structure right above the $21 level. So you might be having a situation whereby pressure might come out to incite another wave of bullish momentum. Is a very strong possibility, and if price breaks down that structure, retest of that level followed by selling pressure, should welcome additional position to this trade. So that is my perspective here on the XAGUSD. If you have any questions, feel free to drop in your inquiries in the comment section. So I continue to look out for selling pressure here as price action is monitored. Now, moving on to the next pair. So what's the next pair we are going to be treating? So the next pair we are going to be looking at is the, let's see, all right, the GBPUSD. So the GBPUSD too is another interesting scenario that we have here. Remember, I told you how much it was painful for me to have missed out on that bullish momentum that started on Wednesday. Well, I missed that significantly well. I was so caught up in my bearish expectation, and I wonder how I didn't see the breakout retest of the structure to give me that signal that a bullish momentum will come in. But some of you took advantage of that move, so well done guys for taking advantage of that move, as price action has moved significantly well in such a way that we have over 250 pips here as price action came back into the 1.21550 level. Now, one thing we have noticed here, since price tested the 1.21550 level, was that we have been noticing selling pressure around that area. And from a technical standpoint, whenever we have an impulsive move like this, we should expect that at one point in time there is going to be a retracement phase, which is going to be a reflection of profit taking activities. And what do I mean by profit taking activities here? Well, for those who are taking advantage of this move right from this level, this area here, at one point in time they want to take some profit, that is, sell it and take the profit that they have gathered so far. So when they are doing this, it's going to be reflected on the chart as a retracement of that impulse leg. So I'm of the opinion that we are at a juncture here where the possibility of a retracement phase is likely going to be happening at this area. So in order to catch the retracement move, if it does happen today, I have identified a structure around the 1.21150 level. As you can see here, it's also a good structure. We saw how this level was holding selling pressure at one point in time during the early hours of yesterday before we saw the breakout of that structure close to the New York session, and then we saw price climb up a little bit, but price came back down. But buyers were enabled to continue to the upside here, as we saw sellers continue to push price right below that level. So at this point in time, I'm thinking that we might be having a retracement phase at this point. Now, to buttress the possible retracement phase that we might be having here, I was able to connect the series of higher lows here, another temporary trend line here, to make our job easier to take advantage of that opportunity if it finally happens. So what I'm looking forward to during the New York session today is selling pressure right below the 1.211500 level to be comfortable in my sell position here on the GBPUSD. So to sell here, we are looking to sell right below the 1.21150, and I'm having my buy zone, sorry, my take profit target around the buy zone area here, which also lines up with the bullish trend line that has been holding bullish momentum since the beginning of the week, beginning of the month. So we can see here, this was the first week of the month. We saw our price was at the 1.110 level before we started seeing price find higher lows and higher highs. So we were able to connect the series of the higher lows here to give us that bullish trend line. So I'm of the opinion that if this retracement phase happens, we might likely see a situation where price comes back into that trend line one more time to incite another wave of a bullish momentum. And if you look at the trend line here, you can see how it also shares a confluence with that very important key level at the 1.19700 level. Remember, we had this level was a resistant point for price action since last week. We saw how that level was holding selling pressure before the breakout of that structure happened on Wednesday of this week. So whenever we have a breakout of a structure, the expectation is that price is likely going to come back to do a retest of that structure with the anticipation of pushing price to the upside. And to understand how important the 1.19700 level, let's scale up to the daily time frame and let's see how that level has been a major determinant of price action in the last couple of months. So if we scale up to the daily time frame here, this is what I was able to identify here. So you can see how this on the daily time frame, we can see that we are on a long-term bearish momentum, and I was able to connect the series of lower highs here to give us that resultant bearish trend line. But the most important structure at this present point of the market is the 1.1970 level, which I showed you on the daily time, on the 1 hour time frame, sorry. And look at how that level has been a major determinant of price action in the past. You can see what happened here in the month of June. It was holding buying pressure. The same thing happened here in the month of August. We saw buying pressure around that area. Then we saw the breakdown of that structure later on in the month of August, giving us a clue of how strong the sellers are at that point. And since then, price has been trading below that structure. So in the last couple of weeks now, we saw price come back into that structure, and during this week we finally witnessed the breakout of that structure. So is price going to continue to the upside here, or are we going to be having a situation where price might likely come back, do a retest of the 1.19700 level to send another wave of bullish momentum, which is what I showed you on the 1 hour time frame? Or we could have a situation where price breaks down the 1.197 retest of structure to send price coming back down into that important 1.14 level that we have been using to guide our trading activities in the last couple of months now, to send another wave of bullish momentum. So you can see how important the 1.197 level is. So that is why I have said that we want to be mindful of to see how price relates to that structure. So going back down to the 1 hour time frame and looking at the current structure we have here, I've said that we continue to look out for selling pressure right below the 1.121150 level to sell back into that structure we identified here, where I said we want to see our price relate to that structure to decipher what next to do. Now, in as much as we are looking forward to selling opportunities here, we cannot ignore the possibility that price might continue to the upside at this point. Remember, since the beginning of the month, price has been trading to the upside here. So if that happens, what we are going to be looking out for to buy this is if price breaks above the 1.21150 level with an engulfing candle, breaking out of that bearish trend line, that bullish trend line here rather, and then price comes back to do either a retest of this bullish trend line or probably come back down here. The most important thing we want to be looking out for is either buy pressure above this level to join the rally to the upside, or a buy pressure above the 1.21150 level to join the rally to the upside. So these are the scenarios I'm looking forward to. So like I said, I continue to look for selling opportunities that is a retracement of the impulse leg. But if price climbs up in such a way that we see an engulfing candle taking us above the 1.2115, well, we will be getting ready to join that bullish momentum. So that is my view here on the GBPUSD. If you have questions, feel free to drop in your inquiries in the comment section. Well, now at this point, I will move on to the last pair that we are going to be looking at for this week. I'm already out of time, but let's quickly run through that. So we have the XAUUSD here, and we have been profitable on this pair actually since the beginning of this week. So at the beginning of the week, let's quickly do a quick review of what our expectations was like at the beginning of the week. So at the beginning of the week, we saw a situation where price started at around the 1,753 level. In fact, this week started on a bearish tone, and because it started on a bearish tone, I was of the opinion that we might be having a bearish momentum for this week. So we saw this impulsive move to the downside, which we actually missed because it happened earlier on in the week. Then we saw the breakdown of the 1,744 level, which was a sign for me that sellers might likely come in. So that was a signal, and remember, we took advantage of the breakdown retest of that structure as we took advantage of this move to the downside. So in fact, we had two situations here. The first one was here on Monday during the New York session. We took advantage of this retest of structure, and price gave us about the market gave us about over 1,000 pips, though we were stopped out with about 100 pips when we moved our stop loss accordingly. Then again on Tuesday, we also had another opportunity of joining that decline, and we took about 500 pips on this one too as well. And on Wednesday too, we took advantage of some 500 pips thereabout before we witnessed this breakout of the 1,744 level. So we anticipated the breakout of the 1,744 level during the live session on Wednesday after observing the buy pressure around the 1,730 level. You can see how that level has been holding buying pressure since the beginning of the week. And one thing I said after identifying this was that we should move our stop loss accordingly and anticipate a breakout of the 1,744 level to join that rally to the upside, and that's exactly what happened. So we took advantage of this move, and price moved about over 1,500 pips in our favor. We moved our stop loss right below the 1,753 level, and we were stopped out with approximately 1,000 pips on this one. Now yesterday, during the live session yesterday, I told you our price has come back into our sell window here, and when price came back into our sell window, we started seeing selling pressure around that area. Can you hear me? Can anyone hear me? I guess we having another. So let me quickly switch my router. So we should be having something better now. So I think it should be better by now. So can you see my screen? Can you hear my voice? All right, so sorry for the break in transmission. So I had to switch my router for better quality. So here we go. So right now, we had during the live session yesterday, I shared with you the scenario where price has come within the sell window we identified earlier in the week. I started seeing selling pressure around that area, and I told you how important that area is. Remember, at the beginning of the week, we identified this reversal pattern, which happened last week as price was caught within a channel between the 1786 and the 1755 level. And one thing I said here during the early hours of this week was that a breakdown of that neckline area is a sign that we might be going bearish for the week. So a breakdown of that level happened, and it appears price has come back again into the neckline area. And what did we notice when price got back into the neckline area? We started seeing selling pressure from this area to emphasize the strength of the sellers and the tendency that price might likely respect that neckline one more time. So what I told you yesterday is that to sell right below the 1755 level is a very good idea, and this is exactly what happened. Price retested the 1755 level, and price has continued to move to the downside from that area. So currently we are running with about 500-600 pips thereabout. So the next thing I'll be advising us to do here is to move your stop loss accordingly, lock in some profit here, as we don't want to get caught up in any sudden pullback that might likely take us out of that position in a loss. Remember, we've been witnessing a bullish momentum since the beginning of this week, and we might be having a situation where price might still climb further to the upside. Even though we have taken this move, let's move our stop loss to break even here, and let's see how price action plays out from here. So another scenario has happened here. So for those who had missed out on that move right below the 1755 level, we also have a structure here at the 1753, and remember how that level was holding selling pressure since the beginning of the week. We had the first touch here, we had a second touch here on Wednesday, then we had the breakout of that structure, and then we had buying pressure again from that level. And in the last 3 to 4 hours now, we finally saw another breakdown of the 1753, which for me is another signal that sellers are still very strong in this market. So I will be looking forward to selling pressure right below the 1753 level on my lower time frame to add more position to the existing position that we have running here. So our take profit target remain around the 1730, and the reason why that is simply because of how that level has been a major buying niche for participants in this market. As you can see, since the beginning of the week, buyers have continued to reject all selling pressure from that level. So let's make that level our take profit target for now, and if price comes within the 1744 level, move your stop loss somewhere right below the 1750, and let's see how price action relates to that level. Are we going to be having buying pressure from here to send price to the upside, or a breakdown? If a breakdown happens, retest of structure should welcome additional position to this trade. So that is my view here on the XAUUSD. I hope I was able to make myself clear here, and let's quickly do a quick recap of what we talked about today, especially for those who missed out on the session. So let's quickly do a recap before we call it a day on the Extreme Speed Live. So the first pair we looked at today is the US oil, and what was our expectation here? Remember, we took advantage of this bullish momentum yesterday, and currently we are in profit of about how many pips now? Over 150 pips in profit on the US oil. So I have told you to move your stop loss accordingly as price broke out the $79 level. So we have somewhere around here, around the $78.50 level as our take profit target. So let's have our take profit, our stop loss rather. We want to move our stop loss accordingly so that we protect our position against any sudden pullback that might likely happen here. Remember, the bullish opportunity we took advantage of yesterday is more or less a counter trend trade. So now, for those who have missed out on this opportunity, I have told you that you should remain patient and see if the market will be presenting us with another opportunity to add more position to this trade. So what we are looking forward to here on the US oil is for price to come back into the $79 area, where I said we'll be looking out for buying pressure to join the rally to the upside from this point. Then I also made mention of a possibility that price might likely break down the $79 level. So what I said here is that if we start seeing reversal pattern around here, which appears to be happening right now, well, I have said that we should look for the golden zone area, which is the between the 50 and the 78.6 if you run your Fibonacci retracement tool through the previous impulse leg. So it's going to be somewhere around the $78 area where price might retrace back into before another wave of bullish momentum happens here. So there is a likely price might come back here, take us out of the previous position with about 100 pips, then comes back within that level, buy pressure there, then we want to be joining that rally to the upside. That is one scenario we are looking forward to here. So that is one. Then if price continue to go to the upside, remember our take profit target is around the $85 level, and from a long-term perspective here, I'm not sure if that's going to hit today, but if it does, well, that is a very massive one. So if we have our take profit target there, so what I said here is that if price breaks out of the $88 level, or if price comes within the $88 level, we want to move our stop loss up a little bit, protect our position, as we want to see how price action will relate to the $80 level area before making any further decision. So there are two likely scenarios that could happen here, which I shared with you. We could be having selling pressure below the $80 level to incite another wave of bearish momentum, or we could be having a breakout of the $80 level where a retest of structure followed by buying pressure could incite another wave, which will welcome additional position to our existing trade. So that is that on the US oil. Then we went on to talk about the US tech option, where we've already identified a selling opportunity here after price broke down the bullish trend line that has been holding bullish pressure since the beginning of the week, break down the $11,850 area to signal a bearish momentum. So since the beginning of the week on the US tech, we have been profitable. Remember, we took advantage of the selling opportunity here, where we took our profit when we started seeing buying pressure here. Then we joined again here on Tuesday, right above the 11,600, and price has continued to move in our favor to the upside. So we have another opportunity to sell here right below the $11,850 area. So my take profit target remains around the 11,500, and the reason why that is simply because of how that level has been holding by niche since the beginning of the week. So let's have our take profit target there, and as soon as price comes into the $11,700 area, lock in some more profit here, so that let's see how price relates to the 11,700 before making any informed decision of either buying or adding more position to our sell trade. Then we went on to talk about the EURUSD as well, where we still have this situation running in the last 24 hours. Remember, we sold right below this level, and price has been caught within a consolidation phase. In fact, we have been seeing multiple rejection of that important key level we identified on the daily time frame at the 1.03750 area. So I said something here that those who missed out on this trade here, let's be patient enough for price to break down the 1.03750 level, retest of structure to join that decline to the downside. And for those who are already in this trade, it is another opportunity to add more position to our existing trade. Now, buying the EURUSD at this point is something I don't want to be doing now because of this current situation that we have here. And when we look at the daily time frame, let's scale back to the daily time frame. I showed you how important the structure we are in right now is. We are right at a confluence between the bearish trend line and the 1.03750 level, a very important structure right now. And the tendency of a selling momentum coming in is still very strong around this area. So though we have the situation here, I've said if a breakdown of the 1.03750 happens on our lower time frame, we want to be joining that decline to the downside, which might get into the $1 mark to incite another wave of a bullish momentum. So going back to the 1 hour time frame, so let's see how that happens. So breakdown retest of the 1.03750, we want to be adding more position to this trade. However, if price breaks out of the 1.04500 level, in such a way that we have an engulfing candle taking us out of that structure, remember how strong that level is for selling pressure since last week. So if we have price take out all the sell position here, then we want to be seeing that as a bullish signal. And if a retest of structure happens, then we want to be thinking of buying the Euro USD. So that is that on the Euro USD. Then we went on to talk about the XAG USD, where we already identified a selling opportunity here yesterday, which we took advantage of right below the $21.50 level after price broke down that structure right below the sell window here. And another thing that made this interesting made this position more interesting is the breakdown of that bullish trend line that has been holding bullish pressure since the beginning of the week. So we had the breakdown of that structure here during the early hours of today. So I'm of the opinion that we might be having another opportunity to add more position to this trade if price comes back, do a retest of the bullish trend line followed by selling pressure. We want to be selling right below the $21.40 area, add more position to our existing trade here. And for those who are already in this trade since yesterday, I have told you, move your stop loss to break even at this point. We are very profitable so far for this week, so it's not something we want to lose that whatever we have gained so far. So we moved on to talk about the GBPUSD, where I told you how we continue to look for selling pressure right below the 1.211500 level, as I am of the opinion that we might be having a retracement of this impulsive move that started this week. We might be having a retracement back into somewhere around here before another wave of bullish momentum happens at this point. However, if price climbs up the 1.21150 level in such a way that price breaks out of that bullish trend line to the upside, well, a retest of either the bullish trend line or this level should be inciting a wave of bullish momentum. But if that does not happen, I will continue to look out for selling pressure right below the 1.21150 level. Then we close the day with the XAUUSD, where we took advantage of a selling opportunity right below the 1,755 level yesterday during the New York session, and since then price has been moving in our favor, as right now we are running with about how many pips in profit right now? Over 500 pips in profit, and I've told you to move your stop loss to break even. Let's see how this plays out. So we have a breakdown of the 1,753. So I have said selling pressure right below this level should give us another opportunity to add more position to our existing trade. So we have our take profit target around the 1,730 level. So let's see if price will get us this far. So let's see what happens. But one thing I said here is that as soon as price gets into the 1,744, we want to be moving our stop loss in our second position when it gets triggered, so that we want to see how price relate to the structure, if we see buying pressure, or we're going to see a breakdown of that structure. So this is what we have talked about so far today. So we were able to trade the US oil, the US tech, the Euro USD, the XAG USD, the GBP USD, and the XAU USD for this week. And for this week, it has been an interesting experience for us here on the Extreme Speed, as we were able to make some money on most of the pairs we treated for this week. So I'm so grateful for being with you guys. I really appreciate every single one of you. Okay, I still see Mrula in the comment section. Okay, thank you for that compliment, and I wish you a wonderful weekend as well. Who else do we have here? We have 877. Good morning to you. Kuf, good morning to you. Good morning, everyone. All right, so I wish you best of luck during the New York session today. Don't get too excited when we see signals like breakout of structures or breakdowns of structure. Scale down to your lower time frame. Look out for selling pressure or buying pressure before you want to be joining that rally or decline, whatever the case may be at that particular point in time. So I wish you a wonderful weekend. I wish you a better evening, and I sincerely look forward to seeing you again on the Extreme Speed Live right here, 10 a.m. on Monday UTC time and 11 a.m. West African time. So thank you very much, guys. I really appreciate. Have a wonderful weekend. Bye bye.